What's up? Welcome back to J Trading. It's Jupiter again. I'm back with another banging video after 2 days. I hope you understand. I'm trying to be consistent. Some days I might not post videos, but believe me, every day I'll be dropping videos that are on fire. Yeah, so today we will see a couple of assets we will analyze together. Okay, we might also take trades live. All right, and there is another trade that I'm currently on. It is boom 500 and it is currently on negative. Yeah, I'm losing money right now, but yeah, I will share how I took that trade and why it is on negative also. But right now, let's start from crash 500. This chart is a line chart. It might look different for some of you guys if you're new to trading, but this is the type of chart that you can use. You can go to setting like this, click on setting. You have three types of chart: bar chart, candlesticks chart, and line chart. Candlesticks is the most famous one. It is called Japanese candlestick. All right, it looks like this. It looks like candles. They are green and red candles which start on the price opening point and stops at the closing price. And when you change this to the line chart, things become neat. The advantage of using line chart is if you want to identify key areas, key resistance or key support areas, always switch to line chart like this, and you can easily spot key areas like this. You see, this area is a key resistance area. This area is also key resistance area, and we have in the opposite side we have key support area here, and we have another key support area here. We have also another one here. So these important key levels are tricky to find if you go to candlestick like this. Let's change to candlestick. Let's go back. So if you go to candlestick chart, you are you can be confused to find. These areas are very obvious, like you can say this is resistance, and this is support. But if you come to this area, which one are you going to choose? Are you going to choose this one or this one, or you're going to consider both of them? So in this kind of tricky situation, what you can do is do yourself a favor, go to setting, change the chart to line chart, and things become clean and neat like this. You can draw trend line like this. You see how consistent things are. Price touches the line here, touches again the line here and here. But if you go to candlestick, all right, it might not be clear. The trend line might not be clear. You can see here all the four candlesticks are on the line. Here also all the four candlesticks are on the line. But when you change it to line chart, you can see clearly price bouncing up from the trend line, bouncing up from the trend line here, the second time, the third time, the fourth time, and the fifth time. You see, you can see things clearly. So when you are trying to find key level or key areas, all right, do yourself a favor, always use line chart. Line chart simplifies your chart. You can see very important levels like this. So what I want to share on crash 500 is currently the price is approaching to this key area, so there might be an opportunity for us to take maybe today or tomorrow after a few hours, or maybe tomorrow. Yeah, so what you have to do is, this is the daily time frame. As you can see on the daily time frame, we have a key area here, all right, and if you go back there, you can see another reversal here on the price. Yeah, the market reversed at this level and at this level, so we can grab a box over there. All right, put the box over there like this, connect this reversal at this area and this reversal. All right, so what you have to do is wait for the price to come back to this level. So currently the price is approaching. I know this is daily time frame. If you go to 4-hour time frame, it is almost there. Maybe after 4 hours or maybe after 8 hours, the price might be bouncing from this area. So what we can do is wait for the market to give us a signal, is the market going to bounce up from this area, or is it going to break this level? Is it going to break this level and go down, continue the bearish trend? As you can see, the price was coming back down from this level, from this area, with a huge momentum. It was falling down, but right now it is approaching to the key support area. So there is the level. That level is, this box area is the level where we are going to make a decision either to buy or to sell. So we are going to see that together, maybe tomorrow or after a few hours. If there is any update, I'll come back with an update and I'll share it with you. So we can go back to for our time frame and change our candlestick to chart to candlestick, and wait for the market to give us a signal over there. Now let's go to boom 1000. On boom 1000, last time I shared this with you twice. I made 2 videos on this, and I put this arrow. If you remember, I put this arrow like this. The market might be bouncing from this area or this area. As you can see, as I told you, as I said, as I predicted, the price is going down. I already took profit at this level, at this area. So currently I'm not on any trade, right, on boom 1000, but the price is going down as predicted. That's a good thing. So for those of you who didn't watch the video, I want to recap what we did. So what we did was we identified key areas here, this one, and this one. We put the box over there, this box, and we waited for the market to break above this box. That's called this area is called a liquidity sweep. So the market killed all the stop losses here, and the people who bought here, they took profit at this level because it broke above a key resistance area. So after that, after the liquidity sweep, market always goes down in the opposite direction because there are people who are going to take trade over this area. At this level, there are people who are taking trade because the price broke out of a key resistance area. This is a resistance area. So whenever price breaks out, there are traders who trade breakout. So they will be buying at that level, and the people who put stop loss just above this key area will be kicked out. So that creates a reverse in momentum. All right, the market shifts its direction from bullish to bearish, and the price comes down to this area. Then the last confirmation that we need is for the price to break a structure. We drew a trend line like this, and that's called a structure. So we waited for the price to break out of the structure, come back to this key area and retest it. We take a trade over there, voila, we make money like this. That's what happened exactly. And now let's go to boom 500, where I'm currently losing money. Let me show you how much I'm losing. Currently I'm on $369 negative. It was more than this, actually. It was a lot. I took 4 trades, 1.2 lot size, 4 positions. I closed some of them at this area. As soon as the market broke above this yellow line, I closed some of them and I kept the others. Right now I'm currently on negative. I don't think this is going to work out, but maybe if the market comes back to this area, there is a chance that I might be closing those and taking another buy trade over there, because as you can see here, we have key level, and we cannot call all these a liquidity sweep. As I told you, liquidity sweep should be not far, not very far from the key level. Key level for us is this one and this one. If it's very far from this level, this key level, it cannot be liquidity sweep. It might be liquidity sweep if it's to this yellow line. That's why I put this yellow line. That yellow line is a liquidity sweep zone. If it is above that area, it is a reversal. It is obvious that the market is going up. So what I did was I took a sell over there and waited for the market to go above this key area and create a liquidity sweep, kill all the stop losses and kill all those people who are buying over there because of breakout, and wait for the market to come back, create a structure, break break that structure, retest it and go back down. That's what I was anticipating, but it didn't work out, unfortunately. As you know, I'm a trader like you. I'm not perfect. I lose money most of the time. What I do is make more money, and lose less money. That's how you become a professional trader. I'm not calling myself professional. I'm someone who's trying to be professional. But what you have to do is always, try to make more more profits than the trades that you lose. There will be losses sometimes, like this one for me. And let's try to check the others also. Boom 300. Let's change the chart to candlestick and let's see if there is something. Yeah, on boom 300 maybe there is an opportunity if the price approach to this area. Currently it's going up. This is 4 hour time frame, so maybe after a couple of hours price might reach to this area like this and create an opportunity for us, since there is a trend over there. You see, you can draw a trend line like this. When price reacts from this area and breaks this structure, you can wait for the price to retest that green area and you can take a sale over there. We'll see this together maybe tomorrow. Yeah, I think this is enough. It's 11 minutes video. I'll come back with another video tomorrow if there is a new update. Otherwise I'll come back after 2 days. Thanks for tuning in. See you.